SBA loan rates are finally dipping below 6%, but not everyone qualifies. In this video, I'll break down exactly who gets access to these low rates, how to position yourself to qualify, and what steps to take right now before rates go back up.
So here's the catch. If you're looking for rates sub 6%, I've been seeing rates in the low 5% range for the SBA 7A loan product. Now, how come most of the time when you're seeing Wall Street Journal prime plus margin of up to 2.75? Well, we're talking about specifically real estate deals. So if you have a strong existing business and you're acquiring another building, or you're buying a building and going from renting a building to owning, then yes, there are banks out there for very strong A+ deals that will deliver in the low to mid fives on an interest rate on a 7A loan. Now, most of the time we're used to these quarterly adjustments based on Wall Street Journal prime plus a margin up to 3. Generally, you see up to 275, and margins can be anywhere from 1.5 to 275, and it just depends on the particular SBA lender, on the deal itself. But if you're an A paper borrower and you have an A paper deal with real estate, then yes, you can get great terms. I've just recently got 2 loan commitments. It was a 5-year fixed at 6.99. Now, those were not A+ deals. They were business acquisitions for new business owners. But if you're an existing business owner and you're expanding your business by buying some more real estate, there's plenty of banks out there that will offer these sub 6% rates. So it's all over the board, essentially, where the rates are, depending on the bank, depending on the deal itself, depending on what type of business. Is it a restaurant? Is it a manufacturing business? But the AA+ banks will deliver under 6% for real estate deals that are very strong. So there you go. That's really it. The rates can go from, you can see deals in the 5s fixed for 3 to 5 years, amortized over 25 years, to rates that are 10.25, potentially even 10.5, that have more hair on the deal. So depending on the situation and the loan to cost and all those variables, there's rates across the boards on these types of deals. So what our team does is we help you navigate the waters. We figure out what lender would be most probable with the best terms. Now, just because that bank can give you a rate in the mid 5s doesn't mean you're actually going to get to the finish line on a deal, right? So there's something called surety of close. So we want to be sure we close, especially on a business acquisition or a real estate purchase. So anyway, that's just my kind of riff on this whole thing, is that, look, depending on all those attributes, we will go out and find the best pricing we can, the best terms, obviously. And maybe your deal is more of a value add play. So it's really about getting the most proceeds or getting the most working capital built into your deal. So there's 101 different reasons why one particular lender would be better for the other. Now, remember, these banks all use the SOP, that SBA, the guidelines, but doesn't mean they don't overlay or do certain deals or only do this deal or this type of deal. It's all over the place. This industry is very fragmented in many ways. Obviously, if it's a cookie cutter type of deal, then the majority of banks do them. But if it's a deal with a lot of airball, there's no collateral, only certain lenders will do that. Some lenders, that's their thing. They love airball deals. That's where they specialize. And we've talked about larger acquisitions where we're bringing in a conventional piece. So we're doing a 7A loan for $5 million, and we're doing a conventional piece for $2 or $3 million, pari passu. So lots of ways of structuring these deals. But if you have a great deal and you are a great borrower, we can get you great rates. Hope that helps. Simply go to bookwithbo.com to schedule a call, and we help you navigate the waters to figure out which particular SBA bank, non-bank, or credit union, PLP, preferred lender, would be the best to fit. That's really where we kind of carve out the most value. Also, structuring deals. One bank might say, hey, you can't do this, it's not eligible. Well, we take it to another bank that says, well, no, you can do it. So we understand how to navigate within the SBA SOP to make sure that what you're hearing from one lender is actually the truth, or can you actually get it done by structuring in a certain way. So there's a lot to it, but we make it simple. Go to bookwithbo.com.
Meet Bo Eckstein, the driving force behind Business Ownership Coach. Unlocking the path to business ownership. Visit www.businessownershipcoach.com. Thrive with Business Ownership Coach.
Hey guys, Bo Eckstein here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide great content.